Hello traders, you're welcome back to the Forex Geek channel. Now let us talk about one of the most effective ways to catch clean market reversals using nothing but volume and support and resistance zones. Okay, this is a high confidence day trading strategy that you can apply right away. So what is the core concept of this strategy? Well, support and resistance zones are areas where price has reacted strongly in the past. Okay? They are actually not random lines. They are not random lines. Yeah? Support and resistance zones are not random lines. They represent zones where institutional buyers or sellers stepped in. All right? You can see. So these are important price points on your charts where reversals usually happen and where breakouts usually happen, and of course fakeouts too. Now, volume on the other hand is the fuel behind price. It tells us how committed the market it is at any given level. So basically when you combine support and resistance and you know when you combine support and resistance with volume, you get a clear view of where the market is likely to reverse and when the momentum is shifting. Okay, so the first step is to identify strong support and resistance zones. Okay, you have to start by marking areas where price has previously rejected, strongly, probably with long wicks, or maybe areas where price have consolidated before a major move. All right, for example, you can see here now we had a period of consolidation around here. Yeah, after a bearish move, we had a period of consolidation before a bullish move started. So you can mark out your consolidation zones as well. And then, of course, you mark out your support and resistance levels where you have rejections of at least 2 points. Okay. And then areas where you have price creating double tops or double bottoms. For example, you can see this and this, double tops, right? So you mark out those areas. Make sure to use higher time frames for these, okay? Use higher time frames like the 1 hour or the 4 hour to draw clean zones. Then you can go down to the 15 minutes or even the 5-minute chart for your execution. Okay, so these zones become your potential reversal areas. When price approaches your marked zone, just pay close attention to volume, right? When price approaches a zone that you marked, pay close attention to volume. Here are 3 things to look for. Okay, you should be looking for volume spike. Okay, let's go to our execution time frame. So when price approaches one of the important levels that you marked out on your chart, the next thing for you to do is to look out for volume spikes. The 3 things include volume spike into the zone, whereby maybe price hits the zone with an aggressive push, or maybe when you have volume that is high but there is no follow through. This could indicate buyer or seller exhaustion. Then volume divergence is another thing to look out for when price makes a new high or maybe a new low, but the volume is lower than the previous swing. Okay, this signals momentum is weakening. And then finally, you look out for volume rejection candles, where you have large wicks combined with rising volume. Let me see if we can find that. When you have large wicks combined with rising volume, okay, it's a sign that institutions are defending that level. Now, the next step is confirmation. After spotting the volume behavior at a key level, you just have to look for confirmation. You can look for confirmations, in the form of rejection candles like pin bars or engulfing candles or doji, and then You can also watch out for a break and retest of a minor structure within the zone. Perhaps having a breakout from this point, and then a retest, and then of course blah 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 blah, and then continuation to the upside, right? So you can actually watch out for break and retest, or a decrease in volume on pullback. Maybe when you have a pullback and the volume is declining, followed by an increase, right? So this gives you evidence that the market has shifted direction and that the reversal is valid. Now let's talk about entry and risk management. Okay, once you have gotten your confirmation, you enter the trade with precision. You just place your stop loss just beyond the wick of the rejection candle or outside the support and resistance zone. Okay, so let's say we got a good opportunity around let's see, I'm trying to find a good opportunity, a good example. Okay, okay, so in this case you can see we had bearish candles here, and then we kind of concluded it with a gravestone doji. You can see a gravestone doji around here, right? A gravestone doji showing bearish momentum. Now after that, with that candlestick confirmation, we had a breakout from this support zone, and you can see how the momentum was strong and the volume. You can see that the volume was much. So we had a good opportunity to enter a trade around this zone, and the stop loss can be beyond the confirmation candle. All right. But in this case, our stop loss might kind of be much because the momentum in this candle was much. Okay. So take profit target should probably be around another support zone. But in this case, as we can see, we eventually got stopped out. You can see the truth is that sometimes, the market will still do whatever it wants to do. All right. But in a situation whereby, let's look for another opportunity. I'm just trying to show you that no strategy is perfect. Yes, no strategy is perfect. Okay, so do not assume that the strategies that we're talking about gives you 100% profit. No, no, no. There is no strategy that can guarantee you 100% profit. So remember that when you have price, test a particular zone. Now you can see that this is the support zone, right? So price actually tested it, although in this case price did not pierce through it, but it tested it, and after a little bit of low momentum, we can see that we had, can see this pin bar. Can you see it? You can see that we had a bullish candlestick pattern giving us a confirmation for an upside. And now, in addition to that, there was a little increase in volume, in as much as the volume increase was not a spike per se, but at least we got an increase in volume, a little increase in volume. And then if you want to get any other confirmations, perhaps you can watch out for any other confirmations. But with this, you can consider entering a buy trade perhaps after the next candle, and your stop loss can be below the zone if you want to be more conservative, right? And then your take profit can be maybe around another key zone. You can just reference a resistance zone for your take profit. So you can see in this particular scenario, it was a winning trade, right? So just make sure that you always use good risk to reward ratios, okay? Minimum of 1:2, so that when you win, you are always winning times 2 of what you lost, okay? So it's very important. And this strategy, works best doing London Open, and also New York session. All right. So avoid applying it in low volume periods like the Asian session, because you need liquidity and volume flow to confirm moves. Okay, so for the London Open, because of the high volatility and the volume, and then the New York session because of the market overlaps and strong reversals. So using volume with support and resistance zones gives you a tactical edge. You are no longer guessing. You are reading what the market is telling you through price and volume behavior. Okay, so hit the like button if this strategy clears up how to spot reversals with confidence. Subscribe for more trading setups like this. where we break down real techniques used by pro traders. Drop a comment if you want a live breakdowns in this method on gold, USD, or NASDAQ, whatnot. Okay, thank you for watching, and I look forward to seeing you in the next video.